Okay, so FOMO is real, not just in Bitcoin, but in a lot of other stocks and a lot of other markets as well. FOMO is really taking over a lot of traders' patience right now, right? And that's what I want to talk about. How, in my opinion, just how I handle FOMO, how hopefully this can spark something in at least one of you to ignite you guys to kind of start, you know, paying attention to the charts in maybe ways that you haven't before, understanding the bigger pictures and how that influences smaller picture structures. But before I jump into the chart, before I jump into Mara stock, there's a few things I want to say. And first one is I'm working on a lot of side projects. This video is now like over a year old, and I have yet to make a video talking about my primary strategy. What I really do, um, not just on these charts that I'm showing you guys in every video, but what I do in the background and things I don't normally show on YouTube. I want to make a strategy video, but there's a lot of projects I'm working on. We got the Dead Trees music. Still working on the first song. There's a lot of other stuff taking up my time, but I'm still working on that. If you guys look at the website, there's a tab that says Learn to Trade. I'm working on something there. There's gonna be a beginner section and an advanced section. So I am working on making sure that I get all these things done because they all mean something. Um, so a lot of projects on the side. They're eventually gonna be complete, and I really want to also soon give you guys that strategy breakdown video so you can better understand at least what I do. And then, going forward, we're gonna jump into the charts. We are going to make sense of this. We're gonna talk about FOMO, and I've said this in the past a few times, um, but I'm gonna go over why I really like these fib structures, why I pay attention to them so much. I mean, if you guys understand where I'm coming from, it'll better let you know what I'm looking for, and then you can make your own due diligence. You can make your own sense of it on your own trades, because of course everything in this video is just what I'm doing, my own personal opinion. So uh, with that being said, let's jump into it. So first thing, these fib structures, you guys got to remember that. Well, the purpose of all of these, especially like there's two ways of looking at it. There's the bigger picture structures, and then there's the more of a short term structure. Regardless, they all do pretty much the same thing. Um, the bigger structures show how far more reasonable extreme lengths, where the price could go down or up to before we start seeing volume decrease and allowing the price to potentially at that point a high probability that there will be the beginning of a shift of structure. Now, a few examples of that. I'm not going to go back. I've done this for like over a year. But we had this one. We had some really, really good ones late last year and early this year that were like super spot on. But basically, there's the red ones. These are more of a bigger picture one, where we see volume go into one direction, begin to shrink, especially when we reach a point 0.5 in the retracements, or when we start hitting the ideally between the 1.236 and the 1.38 extensions within the extensions. Any break within these structures allow the price to settle and then test it again more aggressively. At that point where it settles, it's an idea to look at RSI. It's an idea to look at any previous support and resistances, and just to get a better idea of how aggressive at least I want to be with taking a trade. So uh, previously, right, we had this one right here where, even though, and if you guys been watching, as we were moving higher, a lot of these smaller picture resistance with extensions and then supports with retracements show where we really want to pay attention to. Right, there was some imbalance showing the price could potentially come down here. We were paying attention to the RSI. The RSI was starting to bottom out real early, indicating that any potential test would be super shallow. From there, we just kept going higher after we went into this bigger picture support. From there, I didn't give any bigger picture extensions as resistance until I had this one drawn up here for a while. And basically, what that shows is that it allows the price to go into a much bigger. And so the bigger ones are the targets, the smaller ones are just short term fluctuations that give us an idea of how healthy the structure is before we go into the bigger one. I'll give more detail on this on when I actually break down the strategy video. And there's three elements to it. Um, this is a very small portion of what I'm talking about of what makes up the overall strategy. Um, this is just a way to illustrate it. But then I had this area, right? So it allows the price to go up into the overall extension for much higher prices. But we know, and we've seen this happen so many times before. Let me see if I can give you guys one that's like super easy to. I can't go all the way back. Maybe. No, I can't go all the way back. Okay, so it allows the price to go into the area, show that there is enough bullish momentum. From there, we want to usually see the price not just test the bottom boundaries of the fib extension, but break below it. As long as there is a overlapping, another overlapping bigger picture support, this allow the price to come back down, build up bullish momentum, and then from there go up into the next extension line. This one is at 128,000, allowing the price to break it. Usually, if I, once we finally start going higher, I'll be able to give another extension area. These tend to, just from my own experience, they tend to overlap nicely with the next fib structure. Basically, what it looks like is we break into and surpass the next line. Usually we start seeing volume decrease from there. And it's all calculating investor sentiment for us and allowing us to better grasp it in a much faster pace. And then at that point, we look for another proper retracement before we go up into the next one. And then the retracement should overlap with some imbalance value gaps and usually with some nice smaller picture retracements as well. But basically, again, I'm going to explain all that later on because I want to get into this video. So in previous videos and yesterday's and all that, I said it doesn't matter what the short-term noise is. Any short-term fluctuation does not matter until we have a proper bullish confirmation, right? So I'm going to go over what I mean by that. So right now, overall, I gave you guys a while back this extension, bearish extension, overlapping with an overall retracement. This shows, at least to me, in my opinion, that hey, the price can extend all the way down to potentially 107, 108K, ideally around 110 before we start seeing volume shrink and start building up bullish volume, right? That's where high probability is for that. Now, on top of that, it overlaps with a lot of macroeconomic stuff I've talked about in previous videos, so I'm not going to go over it again. But basically, I kept saying in previous videos, I said, as we continue to move down lower, we have new short-term support areas to keep an eye on. These allow the price to have a continuation of, the downtrend by having these bullish corrections within it. Usually these bullish corrections will come up to either descending resistance or it will come up to a retracement. In this case, the retracement was broken, but volume couldn't hold the price over this swing high. And then previous resistance can still act as resistance in the future. As you can see, the price cannot break over the 0.5, which is at 118,882. So basically, it allows for short-term, long positions to be accumulated with the idea of selling it within retracement. And that would have worked out many times in the past, right? We came down, nice time to start accumulating. We weren't deep in the retracement, but we know that the price can still come down more. Until then, we can see these pumps attempting to push the price higher, but we know that we still have this overall picture down here to keep track of, right? And we came up into resistance, good sell area. We come back down, break the 0.5, another opportunity to buy, and then from there, quite simple. We were keeping track of, and I usually delete these because I don't want to have too many things drawn on the chart. But we came up, sell opportunity. If you were patient enough, bam, we came down into this next support area that I have drawn well before it happened. There's videos, sitting there on YouTube, and then from here we came up, and now we came back down and broke. So if this was bullish, well, we would have seen the RSI bottom out and max out the bottom line. It never maxed it out. It still stayed pretty healthy. And I said this, and it's also reflected in MAR. I'm going to jump into it in a moment. But during these downtrends, if we're still early and the RSI is now reflecting oversold, like at least aggressive oversold in the short term, it indicates that it's just giving it space, it's setting up to allow the RSI to reset at a much lower level. Um, well, if we were keeping an eye on that, we know that this was most likely a bullish fake out. If we were keeping track of a support area with a retracement, it just crashed through it super aggressively. And during this time, the RSI was much higher than it was before. So there was just super simple signs that support the overall view for lower prices down here before we see this correction finally end. There's like Elliott waves in there everyone can look at, but basically, hopefully this makes sense on why I am still very much focused on these lower areas. Bullish confirmation will be simple, a break up, another bullish correction, but this time the bullish correction will hold support well, simple retracement, and it goes higher. As of right now, I can't really draw another support area. As of right now, the support area is just down here below 115k. If we have a continuation where we have like another, it shouldn't really hold above 117.5k. It should show weakness within that area. There's imbalance, value gap, and there will be a retracement there as well. This will, if when that happens, I'll be able to draw another support area. But regardless, the support area it's gonna overlap with the major support. So at that point, there's no reason to, be like, FOMO'd or overly optimistic about it until we actually break in here or have bullish confirmation. Even if we have bullish confirmation, there's more than enough time to capture upside momentum. I mean, we're still well below 128k, and I still believe the bull market, and I explained this in previous videos on why I still believe the bull market is alive, and I'll probably explain in a future one sometime this week or something like that. But regardless, I'm still looking for lower prices. I added another $10,000 today to the big U swing trade. I explained why I like to buy early on these swing trades rather than waiting for the perfect time. I'm okay with buying early, knowing that the price can go lower. I have my reasons for it. I explained it in previous videos, but I'll explain it again in a future one real soon. And I'm completely fine with that. So yeah, we're looking for lower prices. It looks like we're going to break the swing low. We're just going to keep an eye on it because any pump from here can cause a lot of FOMO. But there is, there's no reason to be FOMO'd into it when obviously we're still holding a bearish trend. We have the overall support down here. And we don't have bullish confirmation just yet, right? So there's just no reason to be FOMO'd. Just keep an eye on the bigger picture. Do what makes the most sense to you. But this is what makes sense to me. Now we're going to jump into Mara. And I hope I'm making sense. I'm going to do a video where I actually dedicate time to explain a lot of this. That way in future videos, it just makes sense instead of me talking quickly and rambling on and probably repeating myself a whole ton. But in previous videos, we kept saying, again, understanding why I use these fib areas the way I do. You guys understand why we had really, really nice buying opportunities here, a nice sell opportunity at this imbalance. Imbalance to me usually act as magnets and good buying or selling opportunities depending where it's at on the chart. But we had a nice opportunity two nice opportunities to sell or to buy. We hit the sell area. There was a fake out. I mean, regardless, we never had we had a proper retracement, but after that pump higher, I mean, if you guys were keeping track of it, the way I personally like, if we came down, we held pretty nicely, it showed that it can go much higher, but at that point, we had a bigger picture in previous support, and we've gone over this, and I talked about it so many times earlier this year. On the Mara stock chart, but it acts as strong resistance. As you can see, I never changed that line. We hit resistance. It was getting a little too aggressive in the short term, overbought, right? So we were hanging out, keeping an eye on bigger picture fib retracements. We had a nice buying opportunity. I explained in previous videos why this wasn't like perfect buying. That's why we had a second retest. I'll explain it again probably in a future one, but I don't want to do it every single video. It can get annoying for a lot of you that like to watch this every time I post it. But yeah, from there we had a second test, a proper one, and then from here I gave you guys this area ahead of time, and as you can see, volume decreased and created a a reversal when the volume began to increase once again, and then from there we're going down. Now, what I'm looking at now in Mara stock is a few things. If you guys break down the earnings report, I want to break it down for you guys on a video. What I really like to look for. They are holding more Bitcoin. They are um their their assets are growing. There's a lot of money flowing into maintaining the business to be well prepared for the next halving. Um, I mean, the most important thing to really keep an eye on is how much their shares they're issuing to gather more capital. Um, on top of that, how quickly, by how much their assets are growing monthly and quarterly. Um, and then their productivity, their hash rate, right? So we got to keep an eye on that. Right now, we're in this moment, in my opinion, where hash rates and assets are becoming they're entering this breaking point where eventually, once the halving happens again and Bitcoin becomes so much difficult to mine and it becomes even more incredibly difficult over the next 8 years, having these accumulating these assets and having so much mining power now can really, really set you ahead of competition in the future. And I do believe Mara is more focused on their productivity and their future than they are on pleasing short-term shareholders. That's why they're in the bigger picture. Every bull market cycle for Bitcoin, Mara is making a new low. It just all goes into the early stages of something that it's still very much early in development. Bitcoin, I believe, is still super young, and this is where it's super difficult to make sure you're well prepared for the growth of it, right? And that's where they are right now. But when it comes to short-term trading, I do believe Mara has the opportunity to go much higher. I mean, earlier this year, I gave you guys reasons on why uh, my bullish case is between $45 to $65. Conservatively speaking, if you have an early bull market top, and this can be due to just a lot of macro developments that we will see as they go, and I'll give you my guys my opinion on as they present themselves. But then it will be between $30 and like 35 to 38 bucks basically, and we were just about trying to test it. We got rejected. We have an opportunity to test it again in the future, but as of right now, even though I am overall bullish on Bitcoin, at least um, continuing throughout the rest of this bull cycle, I mean, bull cycles, it's out there. If you guys look at the Bitcoin supply and demand charts, they're available in a lot of websites. Just compare that to potential rates happening soon when tariffs all become under control, and then we start getting rate cuts like crazy, and a lot of money flows into these growth assets. It's gonna be crazy in my opinion. I believe we have that element ahead of us, and that can allow the Bitcoin to have a really, really nice one more pump this year before we enter the next potential bear cycle. And that's what I'm trying to keep an eye on, right? And that's why my bull case for Bitcoin is very conservative. I just rather be out early than to try to maximize and be greedy. Because again, things are evolving in the world, and it's better to be well prepared and maintain proper charts than it is to be overly optimistic and hopeful, right? I mean, I rather be that way than not. But right now with Bitcoin, with Mara, I should say, we still have strong resistance up in this area. We did break below the 0.618 at basically $16.50, and I said I was going to remove the retracement area, and I'll reintroduce it later when it makes sense. I kept saying in previous video, especially in yesterday's video, even though it still has the opportunity to go up before we break the 0.5 retracement at $15.68, even though it still has the opportunity to do that, there's a few elements that even if it does do that, there's going to be a lot of FOMO. There's going to be a lot of people buying in to obviously where there's a retracement, and obviously there's an imbalance gap that can act as strong resistance. This can very much decrease volume as volume attempts to hold bullish. It's happened so much before. There's a reason why this is there. This is where a lot of institutions are looking for leverage positions. There's a lot of liquidations that happen in these imbalance gaps, right? That's why they tend to be a magnet and tend to allow the price to continue on its short-term trajectory, which is downward. That's just a simple way of putting it. Even though it has the opportunity to do that, regardless, if it continues now, great. We can get this discounted price earlier than later. But if it does pump up from here, I believe everyone should be patient because we can easily see the point 0.5 being tested soon after, right? We've seen this happen so many times on bullish fakeouts. We go into accumulation zone, but it fakes out, right? We want to see a nice, more extreme dip into discount. It allows at least myself to be much more confident with the value that I'm looking for, right? So as of right now, it looks like we're going down earlier than waiting for that pump and dip, which is good, right? So the idea here is that within this area, it doesn't matter because anytime we break below the 0.5, even especially, hopefully we extend all the way down to the 0.618 in it below $14.50. This will be really, really good. It'll create so much short-term discounts that I'm not sure it's very sustainable to be such discounted for a long time. I've said this in many times in the past, and it's mainly due to just their monthly reports reminding everyone of what they're really working for, and at least the value behind the stock, more than just the value behind the value behind the company more than just the value behind the stock. And that can be very good for, like, in my opinion, people that look for multi-month long swing trades in stocks. But basically the idea is that the moment we break below the 0.35, which we are now below $17.50, the idea is that we can come down. This opens the pathway up to break below $16, ideally flirting with high 14s to low 15s, but ideally we want to see $14.50 broken briefly. And what this would allow is even deeper value accumulation. I mean, the idea is to accumulate what's believed to soon enough be a much higher stock. Right now, my next leg up for this stock is within this area. It falls very nicely with the support we have here. As you can see, the price is not even at support yet. It comes down to support. It will most likely break it. Ideally, again, I want to see $14.50 flirted with. Before we have the opportunity to go higher, we'll be fluctuating within imbalance. We'll be fluctuating, creating new smaller picture fib retracements and extensions to allow the price to realistically fluctuate as we go up into this area. The moment we break into this area, it's simple, right? We have a resistance we've been keeping an eye on. This retracement allows the roof for this to be, potentially maximized. Although the target really, in my opinion, is really between $21 and $22, pushing it to $22.50. But I believe the median area is very possible. Again, it doesn't have to we don't have to break down below the 0.5 and then quickly break up into this area. It doesn't have to happen that way. Most realistically, it takes time. Just like back here, after we finally hit the 0.5 down here, this time I believe it will break it, not just hit it. There's fluctuations. It takes time. It takes a few weeks before we go up higher. Now, due to interest rate expectations, with everything the Fed said, I wouldn't be surprised if this one takes a while. It can probably take like a month or two. I don't believe this is going to be like a 1 week long pump or less than a month. I believe it's going to take some time, but the idea is, in my opinion, at least, it's just all my opinion. I want to see the price between 1430, 1560, right? We want to see that around that 1450. And then from there, it's accumulating. Pay attention to your risk management, your position sizing, and what you're comfortable with. But the idea is that we're gonna see another opportunity. We're in accumulation opportunity, but the idea is that we want to see that good one. We're in accumulation. Eventually, just like back here, eventually we go up into the next take profit area, just like this one. But I believe it's going to take longer than this one. But again, guys, the idea is that what seems as a good discounted opportunity to open a trade, well, this does. Okay, well, once we buy there, what was the idea? Well, obviously SLs being the previous swing low, because the moment we break below that swing low, the value gap opens up incredibly. Um, and we don't even have like a little bit enough of a pump to even create a bearish extension in case the SLs get triggered. So we don't even have that yet. So there's still opportunity. But yeah, SL being here, TP being here, it's a really good risk to reward ratio, especially with if you guys just open up Mara's monthly reports and all that stuff. Just look at the amount of value they're putting into their assets all the time, right? This is eventually going to be reflected in the future, especially while Bitcoin still holds over 100K. It's looking real good, right? And we're expecting Bitcoin to go much higher, and then eventually when Q4 reports happens in Q1 of 2026, like I believe that's going to be super attractive for the stock. But yeah, yeah, guys, yeah, that's pretty much it. I'm just repeating myself at this point, but as of right now, I'm looking at it similar to this and this. We're in accumulation. The idea is to accumulate and then just let the stock ride out however long it needs to until we hit that TP area. It's as simple as that, guys. Hopefully you enjoyed this video. I'll catch you guys in the next one and take care.